Hey guys, hope you and your families are well. For this video, I was looking at my chart model database for a long period of time. I was trying to find the volatility contraction pattern, which really encapsulates the essence of a volatility contraction pattern, but also looking at things from a volume perspective, from a relative strength perspective, looking at characteristics of individual candlesticks you invariably see as a VCP, as a volatility contraction pattern is building. So this is the best one right now that I could find, and it's CACC. And it's back in 2004. I'd be interested in knowing what is the best VCP, the best volatility contraction pattern you have ever seen. Let me know in the comments section down below. I'd be very interested to take a look at some of those, and maybe I'll include them in a future video. So that's what we're going to be doing in this video. I've got this VCP loaded up. I split it into 3 phases, and I'm going to be trying to teach you to the best of my ability things that I noticed the best of the best, the creme de la creme volatility contraction patterns do. Before we get on into it, I want to let you know that MarketSmith are today's video sponsor. If you're interested in a discounted MarketSmith trial, there is a link in the comments section below. So let's get into CACC, and I will pop up here a chart that happens afterwards, so you know, so I don't have to scroll it forward and then lose all of my spacing. So I've split this into 3 phases. So we've got phase 1, which I'm just calling the demand phase. We've got phase 2, which is the absorption phase, and then we've got phase 3, which is the tightening phase. Now you will have within these 3 phases, I wouldn't read into those titles too much. It's just to help me try and teach it a little bit better. There's going to be evidence of demand, absorption and tightening within each of these phases, but just for this, color coding it, trying to convey key points, it's just an easier way of explaining it. So we're going to talk about the demand phase, common characteristics I see within that first phase. We're then going to talk about the absorption phase, common characteristics that I see the best of the best setups do, and then we're going to talk about the tightening phase, which is arguably the most important part of the phase, and then kind of planning the trade out as well. So let's start over here in this blue area, the demand phase. So what I thought was interesting about this stock and why I wanted to include it is at the start of the move, to kind of ignite the move, what do you notice? What do you see on the chart? Do you see the positive reaction to the earnings? And this candlestick is what I call bullish synchronicity. You have a widening of the spread, opens on the low of the bar, pushes up, increased volume. Very good sign that larger operators in the market are interested. Then you have this kind of low volatility-ish kind of pullback, volume dries up. And then you have this bar here. Huge volume coming through, bullish synchronicity, fantastic bar, gaps up, opens on the low, closes near the high, reclaims all key moving averages, and then it actually pushes up for subsequent days. Then what I think is quite interesting here, what do you notice? So this is it sounds a little bit perverse at first. Stocks can pull back in a bullish way. It's subject to the characteristics. So if you think about one end of the spectrum, what would be a very negative way a stock pulls back? Well, it'd be very high volatility, it'd be very high volume. Instead of seeing bullish synchronicity candlesticks, these widespread green candlesticks, you'd see the opposite. You would see widespread red candlesticks, bearish synchronicity, slicing through key moving averages, rolling back over really quickly. Okay, what is the opposite of that? Well, the opposite of that to me is this. It's low volume. You can see this black line here. This is the 30 bar average that I use. The volume is pretty low. It's consistently below the 30 bar average on the pullback here. You can see that other than this tight inside bar over here, actually every red volume bar is below the 30 bar average, and none of these candlesticks are overly aggressive. And then it finds support on the 10 EMA. Now the 10 EMA, 21 EMA, and also to a lesser extent the 50 SMA are very, very important when you're looking for the quicker stocks in the market. Ideally, you'd like to see them respect those moving averages. So do you see the respect that the stock has for the 10 EMA here? That is also then good when you think about the trade management aspect, and you think about if you were going to use a 10 EMA or the 21 EMA as a trailing stop. I won't go into the trade management aspects in this video too much. And then it kind of has a little gap down reversal bar underneath the 21 EMA. We'll talk about that as we go. But in terms of this kind of first phase, this demand phase, fantastic to see. Positive reaction to the earnings, huge volume, bullish synchronicity coming through, and then the pullback respects the 10 EMA, volume dries up. Generally speaking, it's tight candlesticks, evidence of absorption because you can see the demand tails, you can see the thin, real bodies. Fantastic, right? Then we go into our second phase, which for the purpose of this video, I'm just calling absorption, right? But there's obviously absorption going on here, there's absorption there. It's just to try and convey a point here. I was trying to think of a name, and I thought absorption sounds fairly kind of adequate. So the absorption phase, which is this purple phase here, well, what do we notice? Generally speaking, we see that the stock respects the 10 EMA, there's an undercut, and then a reclaim of the 21 EMA very, very quickly. Now, there's a couple of candlesticks to look for within developing bases. I'll go on to that a little bit now. There's some other videos on the channel, okay, which talk about the six candlesticks that I look for in developing bases. Two that are very important are shakeout demand tails. So see here, shakeout demand tail, even better if it's underneath a key moving average. You can see here, shakeout demand tail. You can then pay attention to the volume. If there is low volume on a shakeout demand tail, it means there isn't much supply that's coming to market. And then the other one, which is takes a little bit more time to be training your eyes for, is gap down reversal bars. So what is a gap down reversal bar? Well, it's a bar like this here, and I would give more significance if it gaps down underneath a key moving average that another trader and other operators in the market may be using as a stop loss level. So you see the prior closes here, and then it gaps down, opens here, and then closes strong and closes here. So it gaps down and then reverses. So as the name implies, a gap down reversal bar. So similar to a shakeout demand tail, it is in essence trying to shake out weak hands. You can then see a couple of other gap down reversal bars. So if you look at this big one here, you can see the prior closes here at the top of this hammer, then it actually gaps down here and closes here. And importantly, this is, I'm probably going into the weeds a little bit too much here, but you see the volume on this gap down reversal bar. It's pretty significant. It turns out to be nearly a quasi kind of bullish engulfing candlestick if you look at the real bodies, but it gaps down, reverses on low volume. Volume is about half the 30-day average. What does this indicate? Price is easily moving to the upside. What does that tell you about supply? There isn't much supply coming to the market. And then 2 bars later, you have another gap down reversal bar. Take a look at the volume. Volume is below the 30-day average. So these are characteristics. Yes, you will see where I want this video to kind of go is, yes, it's about the VCP, 1 contraction, 2 contraction, 3 contraction, higher lows, volume showing up from left to right. But there's some nuances that you will see within a base from a bar perspective. I like using the Japanese candlesticks. I think there's a wealth of information within those. But large operators, if they're trying to shake out weak hands, if they're trying to accumulate the stock, there's repeatable characteristics to that. Shakeout demand tail, some gap down reversal bars as well. The gap down reversal bar, shakeout demand tail could be undercutting a key moving averages. Say if this was a longer base, it may be shakeout demand tail underneath the 50, and then a very quick recovery. So in this kind of quote unquote absorption phase, ideally you want to see tightness in price. And take a look at the volume. Volume is just falling here from left to right, and then this is a free tool you can use in TradingView. Search the indicators, you'll find it. My relative strength line. The stock is hitting 52-week highs on the relative strength line whilst it's still within the base. I cannot stress this enough, that if a stock is hitting 52-week highs while it's still within the base, it is extremely strong. It is one of the strongest indications, the strongest signs of strength that you can possibly see. A stock that is basing in a constructive manner and hitting 52-week highs. Really important. And then we go into this third phase over here. So I've just called this the tightening phase. So this for me is, there's a really good book called it's Jesse Livermore's How to Trade Stocks, I think is the title. It's the Richard Smitten one. The front cover is like black and a little bit orange. I may pop it up on the screen here if I remember to do so in the editing. It's really good, especially actually the second half of the book, and where Livermore talks a lot about patience and poise and things like that. I think it's really interesting. But Livermore talks about the line of least resistance and the pivotal point forming. So what on earth does line of least resistance mean, and what on earth does a pivotal point mean? Well, what Livermore's referring to there is he's looking for the market to start defining a line of least resistance. Now, when that line of least resistance is taken out, and this can be both to the upside, but it can also be line of least resistance to the downside. Specifically here, we're talking about line of least resistance to the upside. So what Livermore is saying is, when the line of least resistance is forming, when price moves through that level, the line of least resistance, the path of least resistance, if that kind of makes more sense to you, instead of thinking about it as the line of least resistance, the path of least resistance for the stock to then travel, and or the market or ETF or commodity, if you're looking at commodities, is within that direction. So the path of least resistance, the line of least resistance, is upwards in this instance. Okay, that all sounds great, but how on earth do we actually define that? What do we look for? Well, I look for this. This is my interpretation of it. Multiple tight candlesticks, setting up preferably around one or more key moving averages with low relative volume, and here is an extreme sign of strength. I cannot stress this enough. The stock is hitting 52-week highs while it's still in this kind of third tightening phase. So you've seen it in the second phase, you're then seeing it in the third phase. The stock's hitting 52-week highs. It's yelling at you. It is so strong here. It's so strong. I cannot stress this enough. So you have extreme tightness in price with volume consistently below the 30-bar average, and the stock is hitting 52-week highs in the pivot point as the line of least resistance is forming, as that kind of path of least resistance is forming, if you like. So in this third and final phase, what are you looking for? Let's distill it down. Multiple tight candlesticks, and actually it's better to see, in my view, a mini Davis box. So where price is basically just trading in a narrow range. It's just going sideways in a fairly narrow range. Now the narrow range is obviously relative. You want to be comparing apples and apples, pears and pears. So this stock here, we're comparing the action to the stock's prior action, to the basing action. How is it set up previously? We're not comparing the tightness of this stock relative to the tightness of a volatile biotech stock, or a gold stock, or Apple, or Google, or Amazon, or Netflix. Okay, keep it relative, focus on the stock's own action. So this here, this third and final phase, this is another way that I think about it. Is I think, and I'm a big proponent of Richard Wyckoff, who interviewed Jesse Livermore many a time, and Richard Wyckoff, and it really struck home for me. For whatever reason, this just makes sense to me, that think of all the movements in a stock as though they were being kind of manipulated by a single entity, which Richard Wyckoff, help if I could talk in these videos, called the composite operator. So think about that kind of composite operator, that they are manipulating the stock for their advantage. What are they trying to do with it? Are they accumulating? Are they distributing? So potentially it's a distribution base building, which again, there would be repeatable characteristics to that. So when you view it in the kind of context of, okay, there's a single entity controlling this stock, manipulating this stock. Now there isn't, but for me, it's a constructive way of thinking about things, because then I'm trying to think, what are the repeatable characteristics that this kind of single entity, this composite operator would be doing? What do I see occur time and time again, and especially in the better basing patterns, the better kind of instances of flags, VCPs, cup and handles. So this third and final part here, the tightening, for me, in my interpretation, this is a very long way of getting to the actual point, is it's now ready. The large operator, the composite operator, has now got the stock in the position they want it to get into. They have built out the pivotal point. They have absorbed the supply. They have shaken out the weak hands in the prior phases. The stock is now in the proverbial gate, and it's ready to run the race. These are the repeatable characteristics I'm looking for, okay, that pivot point has now been formed. The stock's ready to go if it can take out the line of least resistance, which in this instance here was a very nice round number as well of $20. So albeit this is not maybe the best kind of VCP you're ever gonna see, but actually it's one of the best VCPs for showing you multiple different things that a VCP should do in the actual higher quality VCPs that's set up. The tightness in price, the big demand moving in, then the inability for price to really pull back, the respect to the key moving averages, the volume drying up, the 52-week highs in the base, these really nice the gap down reversal bars coming through, the shakeout demand tails, the very quick, this is actually a gap down reversal bar which quickly then reclaims the 21 EMA, the 3 contractions, the extreme tightness in volume and price in the third and final bit, the 52-week high on the trigger bar. I mean, on the trigger bar you get a 52-week high. Then if I just play this forward one bar, as it then breaks out, you have a 52-week high on the breakout bar as well. I love 52-week highs on the breakout bar, and even better, even stronger, if you see a 52-week high on what I call the trigger bar, which is where volume really dries up sideways. It's the final piece of the proverbial jigsaw puzzle coming together. Extreme sign of strength, because in this time here, if you think about it, why is the stock hitting 52-week highs on the RS line in this third and final tightening phase, and it's only going sideways? What does that tell you the market is doing during that time? The market's going down. This stock isn't going down. This stock is holding up. It is telling you, I am very, very, very strong. Okay, the large operator, composite operator, however you want to think about it, is absorbing supply. It's a stock that's being accumulated, and then you see the stock gets out very, very well indeed. So I'll wrap it up there, guys. I hope you enjoyed that video. if you want to go and join the membership that I have, there's over 100 hours, probably close to 150 hours now of educational content in there, where I go very, very deep into all of these specific topics. So if you like these videos, then I think you'll find a lot of value in the in some of the membership and the live coaching videos. So I would encourage you to use the link down below and have a look at that and see if it is of interest to you. Thank you very much for watching as always, and I will see you in a future video.